Brad Muniz, partner at Sobel and Company, and I would like to welcome you to Sobel Insights. Sobel Insights is a weekly series to provide some brief information on various topics. Our goal is to keep the sessions to 15 minutes. At this point, we're not issuing CPE on the particular topics. If we ever get into the world of nano credits, we'll start providing CPE. If you have any ideas for topics or speakers, feel free to email me. You'll see my email at the end or during the presentation. Today's topic is tax season, 1040s. And our presenter is Mary Ford. You probably saw her on one of our other presentations. If you didn't, go check our website. She did a great presentation. Mary Ford is a tax director and primarily focuses on personal returns. And I'm looking, I don't see any wine. So I'll ask the question, how is your busy season going so far?
Oh, Brad. Well, it's been a challenging, slow start to the season for a few reasons. The first was the present that we got at the last week of the year. The Coronavirus Relief Act brought some changes to the returns that the IRS, it was too much for the IRS to handle, not only issuing the checks, but changing, the forms to reflect the changes of that bill, that our tax season was delayed and it's getting started. We didn't get started this year till the middle of February. And that also caused our software company to be delayed in getting all the forms finalized. So we really couldn't get ramped up until, I'm gonna say, like the last week in February, and information is just now starting to come in droves right now. So we would have been well into this 2 weeks ago, whereas I feel like we're just getting started. And with the deadline being April 15th, we have not gotten an extension similar to last year. I feel like it's going to be a crunch this year. Now
there's talk of an extension.
Yeah.
I don't want it, but I understand why we possibly need it.
No.
I want to say though, if there is an extension, to our viewers, this doesn't mean get us your information later, okay?
Right. No, I agree, because and I'm glad they took my my wish was to not extend it to July 15th. I think it makes so much more sense to have it a June 15th extension, because that's when the second quarter estimates are due. It just makes more sense. So I do understand, there is no word on that yet, but I do understand if we get one. I won't be happy about it, but I think it will ease our, pain for these next 3 weeks.
You have a daughter that's going to be graduating, so it's going to be right up against prom and graduation time. So
I have two graduating, one high school, one college.
Okay, all right. So it's going to be a fun June for you.
But yeah,
go ahead. I'm sorry.
Go ahead. No, I'm sorry. And I just want to say the other challenge this year was working remotely. Where our firm is predominantly working remotely right now. And going into tax season, we set up the flow of the tax documents and encouraged our clients to submit their data electronically to us this year.
Right.
And a lot of them have been doing it, which it's been great, and I know it's a muscle like we're all building, right? Sending information securely and trusting that. But, with that, there has been a lot of problems with the data that comes in as well. Ideally, if you're sending us your data electronically, we would prefer a PDF of all your data. That just means scanning a copy to a PDF, not taking a picture of it and sending us, 47 JPEGs that we have to convert each one to a PDF and then combine it. It kind of bogs down the process. So, the clients are learning, we're learning, what people are doing. We'll definitely perfect that going forward. It is our goal to be paperless office as much as we can. But we still have our clients that prefer to send in their information on paper. And, we're getting a lot of paper information, but it takes us longer to verify that we've received it. So clients are calling us, they drop it off at 10 and they call us at 2. Did you get my information yet? And unfortunately, it does take 24 to 48 hours for our Tax Central people to process that information, because what they're doing is they're opening the mail, they're putting it into to be scanned. And once it's scanned, it's saved to our secured network, and that's when I can see it.
Right.
Can't see it till all that is done. So people have to be patient with us. I just wanted to.
Yeah, and being remote also, people don't understand we're not having the meetings that we used to.
Right.
People are uncomfortable having other people coming into the office from the outside. Some people are uncomfortable meeting outside. So unfortunately, those live meetings are not happening as much, to the client's chagrin, I'm sure. Moving on with this, so you mentioned some changes, and I hear questions about this, and I've got to ask because I'm even confused about it. What's with these stimulus checks?
Yeah, yeah.
I didn't get mine too, Mary. Can you check on it for me?
I know, no, that's, we were doing a lot of that earlier, but with the stimulus checks, if you did receive a stimulus check and you received the full amount, that would be $1,200 each individual. So a married couple would receive $2,400, an individual would receive $1,200. And the second stimulus checks also that came out in January, that is also part of your 2020 information. That would be $600 for each individual. We don't necessarily need to have that information if you receive the full amount, because there is no clawback provision, Brad. So
okay.
If their income, if they receive those stimulus payments based on their 2019 return or 2018 return, which had lower income and they got the full amount, and then in 2020 their income's higher, it doesn't matter that, they're not making them pay anything back. So if you got the full amount, you're good. There's nothing you have to do. Where we really need to understand is if you received a partial stimulus payment and your income went down in 2020, then you want to tell us, because we can get an additional credit for you on your 2020 return.
Okay. And I'm getting the questions of, I got the check in January.
Yeah.
Should I be picking it up in 2020? So I'm advising people, because it was supposed to be, I thought the checks were cut on December 31st or around December 31st, or the cards that they received. So they're not picking it up in income, as you said.
No,
Right.
no, they're not. But it is part of the reconciliation, we're calling it, the reconciliation of what stimulus payment they received and if they're entitled to any additional amount.
Okay.
Part of it.
So other than these stimulus checks, and most of the people that we're talking to here are not dealing with PPP. You may have some sole proprietors that have PPP. That's a payroll protection loan, a protection payment loan. What other significant changes should a individual be concerned about with their 1040?
Okay, so one of the things I'm seeing is with individuals who received unemployment income in 2020. Initially, they're having a pretty big tax bill, when we look at it. So, and I put a couple of returns through where, they received the federal unemployment of $600, for the period, and then also the state unemployment, and it is taxable on your federal return. So they were having a pretty good size payment due. And then I read when the Senate got a hold of this most recent stimulus package, that, by the way, it just passed an hour ago. Within the hour, it's called the American Rescue Plan Act. And within that act, there is a provision to exclude $10,200 of your unemployment income. So you won't have to pay tax on that, which is very helpful to a lot of individuals, especially the younger individuals that don't have a lot of other income, because there is an income limitation like everything else that comes out of
course,
tax, right?
Yep.
If you make more than $150,000, you are not entitled to this exclusion of your unemployment insurance. So if you worked for part of the year and you earned income and collected unemployment, you may still have to pay tax on it. But the lower income people, this is a pretty good tax break,
No, absolutely. Yeah, I have some clients that received the unemployment and didn't do withholding or didn't do adequate withholding because their spouse had some income, and now they're paying some good tax on it. So that's
so this will help them.
News.
Yeah, it is breaking news. So
SNN. Mary, Mary Ford on SNN,
Yes.
Sobel News Network. So there's a gift that people get from some of their credit card companies when they're having some troubled times. And what people don't realize about that gift that they get from their credit card companies is that the IRS shares in that gift. Cancellation of debt.
Right. Yes. Cancellation of credit card debt. We're seeing a lot of that, in these difficult times, Brad. And if you had, and you may not be aware of it, but if you would have received a Form 1099-C this year that the credit card companies would send to you, telling you this is how much your credit card debt was that we have forgiven this year. And generally that would be taxable income to you, and there's no withholding. So potentially you would have you have to pay tax on that. If you don't have other tax withholdings to cover it. There are exceptions to this, though. There's a form in Form 982 that lists these extensions. So if you are insolvent, if you can prove that you are insolvent, and what does that mean? That means if you list all of your liabilities, all of your credit card, all of your debts, mortgages, loans, car loans, all of your debt, compare it to all of your assets, meaning your bank accounts, any stock brokerage accounts. You don't have to include your retirement assets in an insolvency,
Okay.
which is a good thing. But if you take your liabilities, compare it to all your assets, whatever the excess liability amount is, if that exceeds your debt that is being forgiven, you don't have to pay tax on it. There's a
Okay. Yeah, I saw that, and it's unfortunate because a lot of people go through this credit card restructuring, and then all of a sudden they don't realize that they're going to get a 1099 at the end of the year. I know somebody who never received the 1099. It got lost in the mail, they moved or whatever, and they never received the 1099, and then received a notice from the IRS that their income was understated.
Yeah, that's a bummer, but
Right.
yeah.
Yeah, and then they want to charge to pay their taxes with their credit card. So it's a vicious circle that goes around. I'm not laughing about their situation. It's just the insanity of the way things go around. I think for New Jersey, I think that might not be taxable, but that's a New Jersey seminar. We're not talking New Jersey right now.
Yeah, right, yeah.
So there's the other thing that, I've been struggling with for years with, the my generation type of thing is compared to the younger generation is, my generation and older don't want to give their bank account information. And even some of the younger people didn't want to give their bank account information, and then they didn't get the stimulus checks because it was lost in the mail, it was sent to their old address, and they said, well, why don't you just have it direct? One client said to me, can you just tell the IRS my bank account number? And it's like, I do that, it's on the tax return.
Right.
I know they think I know the director, but I don't. Should people use direct deposit and direct debit?
Yeah, now more than ever, I think people are learning this because of the time that I spent calling the IRS, looking for refund checks, looking for payments that were mailed and the IRS didn't receive them, or they received it, but it didn't get properly applied to the taxpayer's account last year. The pain that we went through, and how people get very upset when they get a letter from the IRS, and who's the person that they call, Brad?
Oh, yes, yep.
Yeah, and they're very nervous about it, and because of the pandemic, the IRS employees are also working remotely, and they are in a significant backlog in processing anything they receive in paper. So we encourage everyone to, if you have a payment due, pay it electronically. Or if you have a refund due, have it directly credited to your account. If you have a payment due, we can file your return, but we always key it in the system so that the payment is not taken from your account until on April 15th. So that is also a worry for some people. You don't have to pay your taxes when you file your return. You just have to pay it before April 15th.
Right.
Want to let people know that.
The United States is one of the areas that still uses checks compared to other countries. So I think people are going to start going that way, but it'll make people's life a lot simpler, especially for the if they are getting a refund. But to your point, thank you to the point that you made. Thank you for saying it, that it will be generally tagged as to April 15th or the due date of the return. If it was a corporate return, March 15th, which is Monday, for the extension. So, all right, we're almost at the 15-minute mark. Anything else that you want to provide? Any other
Oh
information?
yeah, there was something I wanted to mention before about what I'm seeing for retired individuals who have been taking RMDs, required minimum distributions, but they didn't take it in 2020 because of the CARES Act allowing them to forgo it for 2020.
Right.
I'm seeing big swings in the amount of taxes that either they owe or that they are getting refunds now that they didn't get in the past because number one, maybe they continue to make the same estimated tax payments based that they had the RMDs in their income, or they had withholdings on their required minimum distribution
Right.
that they were using to offset all their other income, and they didn't have it. So they were like, what? I owe money. So I'm seeing some big surprises there. I wanted to alert people that it's also because of that, if you did not take your RMDs in 2020, it's important to talk with your tax preparer to make sure that you have adequate estimated taxes paid for 2021 or adequate withholding from your RMDs for 2021, because it's going to be a difference now.
Right. Or expect that you're going to have to pay a lot in April of 2022.
Right.
Because they're RMDs. Yep.
Yeah. Yeah. So that's also something I've been spending a lot of time explaining to people. What's different.
Well, great, Mary. I appreciate the information. I know the viewers appreciate it. They really enjoyed the last one that you did. As I mentioned, the last presentation Mary did, please go look at our website and look for the other sessions that we've presented, not just on taxes, but on PPP, on various other topics. I want to thank Mary for presenting today. It's always great when you come on. I'll show you the list, what somebody sent me today, about this long of ideas of what they'd love to hear. And I think that you and I are going to talk for 4 hours at the next time we can go through it.
Right.
But it'll be after April 15th, possibly.
Okay, I would appreciate that. Yeah, we're climbing that mountain right now, so it'll be.
All right. Thank you, Mary, and thank you everybody else for watching. And look for other presentations.
Yep.